Tesla stock is down about almost 7.5% at the time of recording this video, and I think it's an appropriate time to do a little shot of the mezcal. Nothing too crazy because we can't celebrate 7% down like it's a great thing. But I will explain exactly what's going on with Tesla stock, why Tesla stock is down 7% in spite of the new information that we got today. That was actually very positive. I actually liked the conference call that we got today, and I think Wall Street's reacting for other reasons. And I will break down exactly what these other reasons are and what's going on. But first, cheers. Super smoky. I don't know if you guys have this. Tastes like you're drinking at the bottom of a campfire. So first things first, we went over all of the numbers that you needed to know in the last video. As a brief summary, revenue came in about $1 billion, a little bit more than expected. Free cash flow came in about $500 million less than expected, but that was really because of the investments into AI infrastructure. You had EPS that came in at 52 cents per share. We were expecting 62 cents per share, a little bit worse than expected, but auto gross margins came in at 18%, and we were expecting about 17.4%. So it was a bit of a mixed bag as far as Tesla numbers themselves, and as I explained on this channel, many times, like 4 or 5 times, I maybe 10 times in different videos, I stated this was not about Tesla's numbers. None of this drop that you're seeing has anything to do with Tesla's numbers. As I clearly stated in the last 2 videos, the biggest things we needed from Tesla to get Tesla stock to move higher were, number 1, new products to be unveiled, new timelines, new insight. We really didn't get any of that. Like, nothing of that sort. Tesla basically said, we want to save any new developments for product launch events. So we didn't get anything new. And the second thing that was going to be a big driver for Tesla were the questions and answers about the Robotaxi and the Robotaxi event and when it was going to take place. And it was confirmed from Elon Musk, the new Robotaxi date is October 10th. And you can see that here, Tesla officially changes the Robotaxi event to October 10th, and we really didn't get anything definitive until now when it was going to be, if it was actually going to be delayed. So just simply put, mix these two things together. No new updates on vehicle models, which it was optimistic thinking that would happen, but after all, we did get that image from Tesla's shareholder meeting of those vehicles covered up. Perhaps we could have gotten more details than we got, but we didn't get anything. So that's not great. Robotaxi event is delayed. That's not exactly great as far as momentum in the near term for Tesla. Now, Elon Musk did say something that I thought was very interesting, and really a couple different things that I found interesting, but we'll talk about those later on throughout this video. Tesla's management team was asked by an analyst, are these cheaper models going to be just changes to the existing models that Tesla has now over the next coming years? Or basically, are we going to get fresh new vehicles, or is it just going to be a smaller battery pack in the Model 3, maybe a smaller overall vehicle? Elon Musk, he paused for a minute, and then he said, I want to be careful of the Osborne effect. I don't want to announce something great that impacts our near-term sales. So kind of suggesting that maybe this is something that's just different, that you know, is going to be a lot different than the Model 3 or the Model Y or products that we currently have from Tesla. Now, something else that Elon Musk said that I found different from other prior earnings calls was a question that Tesla was yet again asked by analysts that says, is Tesla still in talks to license FSD to a major OEM? Instead of referencing one major OEM like Tesla has done in the past, Elon Musk says there are a few major OEMs that have been interested in licensing Tesla's FSD. Now, later on throughout the call, about 20 minutes later, Elon Musk stated that OEMs do not move fast. Tesla was asked from an analyst, if we were to actually get a licensing deal, wouldn't it take years for that revenue to actually, start showing up, to get the software into those vehicles, to get the hardware into those vehicles? And would Tesla announce that right away, or would Tesla wait until that revenue actually started to come in to announce these licensing deals? And this is where Elon said, oh, yes, OEMs do not move fast. So Elon basically confirmed that it would take years from an actual deal being signed to the actual recognition of revenue. Now, that could be 1 year, that could be 2 years, that could be 3, 4, 5 years. Didn't get much clarity on the number of years. And Elon Musk later throughout the call went on to reference that Tesla's really only interested in doing an FSD licensing deal for a large quantity of vehicles. If they were approached for 10,000 or 20,000 FSD licensing units, they really wouldn't be interested in that. Elon Musk also reiterated what we all know on the earnings call, and Elon Musk says just boldly, we are the leaders in real-world AI. Now, there was also a lot of talk on the earnings call about the regulatory environment for launching the Robotaxis, because it says in Tesla's shareholder deck that basically regulation could be one of the hurdles to get Robotaxis actually out there on the road. And that seemed like more of a formality when we actually got to the earnings call. The executives, not just Elon Musk, but the other individuals on the call, stated a couple of different times, like 3 or 4 different times, that really regulatory approval is not going to be such an issue when the data shows that it is magnitude safer than humans driving. They basically went on to say that these regulators will have no choice but to approve Tesla's FSD when the data is so clear that it's much safer than human drivers. So some of those regulatory concerns that were brought up in the shareholder deck that came out at 4 p.m. today were kind of dissolved, if you will, on the earnings call. It doesn't look like regulators are really a concern over at Tesla at all. Elon Musk also was asked about an updated timeline for Giga Mexico. This was one of the retail shareholders' questions, and Elon Musk says, quote, "We are currently paused on Mexico until the election. Trump said he will raise tariffs, so it doesn't make sense to invest in Mexico until we get more details after the election." Which I would say just makes sense from a business standpoint. The executive team did announce on the earnings call, which I found very impressive, that over 2/3 of their sales in Q2 of overall deliveries were to first-time Tesla buyers. They also said, quote, "This is exciting." And why that's exciting is because when you tend to get people into the Tesla ecosystem, they don't tend to leave. About 85% to 90%, depending on where you're looking at and different demographics and age groups of people, tend to buy another Tesla after they own a Tesla. They don't tend to go from Tesla to GM, right? They don't tend to go from Tesla to Lucid or Tesla to Rivian, as much as other auto brands and consumer loyalties can change within brand to brand. Tesla tends to attract and keep individuals into the Tesla ecosystem. Elon Musk also says he would be highly surprised if Tesla was unable to do Robotaxi rides by the end of this year or 2025. This was another question that was asked by retail investors. This was the most upvoted question for this conference call, and it said, when should we expect the first Robotaxi ride? And Elon said, well, I'd be surprised, highly surprised, if it wasn't this year or basically next year. Elon Musk also went on to say that with 12.5 or version 12.6 of FSD, that's when they can really start to go to regulators and say, hey, look at this data. It's much better than human drivers, because it's already like 4 or 5 times better than human drivers in terms of accidents per miles driven. But basically over the next 1 to 2 fully integrated software stacks, merging highway and city driving stacks, they're really going to be able to go to the regulators and show the compelling case of why robotaxis should be allowed on the streets. The Tesla team was also asked about the regulatory approval that is listed as a gate factor for FSD in the shareholder deck. Is the robotaxi approach one that geofenced, state by state, or how is that going to work? Elon Musk said our approach is a broad one, not like Waymo that is quite fragile. We are creating something that could work theoretically on a new Earth. We find that when the data shows FSD is safer than humans, regulators are quite open to it. They are morally obligated to approve. I don't think the regulators will be a huge problem. Another analyst said, I might be comparing apples to oranges, but GM canceled the robotaxi vehicle this morning. Is there a different regulatory concern? Elon Musk said the real reason they canceled it is because GM can't make it work. To blame the regulators is misleading. Their technology is subpar. Waymo is doing it just fine. The Tesla team was also asked yet again, will you start with just a couple of cars in a city, or how would the actual launch start for Tesla's robotaxis? And to an uneducated analyst, that's a valid question, right? For someone that has not been paying attention. Like, if you're trying to do a robotaxi service in a city, you probably need quite a few vehicles in that city to actually start marketing that service. Elon Musk said, maybe I'm not communicating this correctly, but it will be the entire Tesla fleet. This will be instant scale. Elon Musk went on to reference Airbnbs to say that if you own an Airbnb, sometimes you can rent it out. Sometimes you can use it for yourself. Some people would never Airbnb their house. And that's kind of the same way you would think about the robotaxi network. Tesla would take a portion of that revenue, and there would be some people that would sign their vehicles up to the Tesla robotaxi platform. There'd be some people that would not. But basically, there'd be plenty of vehicles to start operation in basically any city. Elon Musk also said pretty bluntly, which I agree with, quote, if you don't think Tesla will solve autonomous cars, you should sell Tesla stock. Elon Musk and the Tesla team were also asked if they would look to partner with any companies, and Elon Musk said no. You'll literally open the Tesla app and summon a car. We will have over 8 or 20 million cars. The cars are able to operate 24/7. It's basically infinite scale. And then Elon went on to reference that we will make some number of cars that will be owned by Tesla, but will still be a part of the Tesla fleet. Elon Musk reiterated potentially 100 million Teslas could be on the road in the future, and billions of Optimus bots, basically saying that it only makes sense, quote, to use that massive inference compute. And this is kind of like Amazon that has a bunch of servers that they rent out, basically a big cloud provider. Same with Microsoft, Google, they all do this. But Tesla would be by far the biggest, data center, if you will, server, potential rental company in the world if they could utilize all of that massive training compute, or really just data inference compute. But that is obviously a goal that is way down the line. Tesla was also asked, or the Tesla team, I should say, do you think auto revenue will fall under 50% of total revenue? Elon Musk said long-term value of Optimus will exceed everything at Tesla combined. He said everyone's going to want one. And then you have the industrial use, which could be even greater utilization, or even more desirable than, people wanting Optimus bots. Elon Musk specifically was asked about a Trump potential presidency, and some of the comments that he's made recently about that actually being positive for Tesla. The actual question says, if Trump wins, there is a higher chance IRA credits get cut. So can you clarify if this would be a negative for profitability? Elon Musk had a long pause, maybe 10, 15 second pause, and said, I guess there would be some impact in the short term, but would be devastating for our competitors. Long term would be a positive for Tesla. These other things are just noise compared to autonomy. Elon Musk also said something that I really like to hear as well. He said, quote, I think people are really underestimating long-term stationary power storage by a couple orders of magnitude. He went on to say, and probably a 2 or 3 minute long spiel about all of the power that is generated during not peak hours that is unable to be stored at power plants. And that's kind of why you get blackouts, especially in like California or other areas when there is a lot of demand for electricity, especially on hot days or super cold days for that matter, because these companies, these grids don't have a way to properly store all that energy to deploy that during peak usage compared to, when there's extra energy. And that makes a lot of sense. I mean, everywhere, literally in the world, could benefit from having these stationary batteries to just collect that extra energy that is stored not during peak hours. The Tesla team also talked a fair bit about the new tariffs in Europe and how Giga Shanghai could be affected as an export hub, mainly to Europe. And they basically said they're still trying to figure out how they can get around this, how to best operate with these new tariffs, that they were not picked up in the first round of tariffs, but they were picked up in the second round of tariffs. They go on to say that they are building vehicles in Berlin that were delivered to the UK last quarter, so getting around that a little bit. And they say, quote, "We are still examining the best strategy, but we are still importing Teslas to Europe from China. We will keep adapting." So these were the main headliners for Tesla's earnings call. I think the bottom line way to put this, if you are a long-term investor in Tesla, today was a big positive. And that's why we took a shot of the mezcal, because if you're a long-term investor, today was you got everything you could have asked for. If you're a near-term momentum trader, if you had options, if you were betting that Tesla was going to massively rally after this earnings, I already told you the two things that could cause that are new updates to the new models, new timing, new guidance around those new models, what they look like, start of production, any new details along those lines. Did not get that. Robotaxi event, it's confirmed. It's delayed. We really didn't get a good reason to why it's delayed or any new details on that as well. So there's not a lot of near-term optimism following those two things. But again, if you're a long-term investor, even over the next 6 months, this was positive, what you got today. Now, I think a good portion of the selling that you are currently seeing in Tesla is also the fact that there's a lot of this political uncertainty. Earnings season just started, and it's kind of a mixed bag across the board. The S&P is down almost 0.5% for futures heading into tomorrow, based on Tesla, based on Google earnings. You can even see Google is down about 1.5% in after hours. Meta's down 1.5%. Apple's down 0.1%. Nvidia's down 1.5%. Microsoft's down 0.1%. Amazon down 0.2%. But specifically Google, I mean, the AI revenue generation just doesn't look that optimistic. Yeah, sure, they're saving money. They're cutting cost, but AI is not really adding to revenue at this point. And you didn't get AI kind of results, right? There wasn't a lot to get people excited about in that sense. So you are seeing a little bit of the AI trade taking a back burner here. And recently, Tesla's started to be grouped in that AI category. This was not just Tesla's earnings that caused this. This was also Google that just didn't impress investors. Like, it was good earnings, but did it impress anyone? No, it was priced in. It was so-so. It was mediocre. And some people would say the same for Tesla, especially with the numbers that came out that were kind of a mixed bag across the board. I would say a little bit better than not, especially auto gross margins coming in so much better than expected. But you didn't have the wow factor, at least for the near term. That's the problem here. There was no wow factor. There was really no new information from a near-term perspective. New models, Robotaxi event, just we didn't learn much of anything new. And when you have a stock that's up 75% in a quarter, you need new momentum to keep that thing going. So that's the overall consensus view of this earnings. Not good in the short term, not good for momentum traders, but very, very positive for investors that are looking maybe 6 months out. This does nothing to erode the bull thesis that I have for Tesla stock towards the end of this year. Nothing changes here. Still think Tesla hits new all-time highs by the end of this year, fueled by the Robotaxi event. And hopefully now that it's being delayed until October, that means we get a knock your socks off kind of Robotaxi event. And also, let's just be honest, we were due for a correction anyways. Like, part of this drop in Tesla, a good couple percentage points of this drop, is also due to algorithmic selling in just the broader markets. Because, I mean, you're down 0.5% in futures for futures markets. That doesn't happen all the time. And especially as we get more earnings coming tomorrow morning, we get more earnings throughout the rest of this week, and your other big tech names mainly coming next week, yeah, there's a reason to take a little bit off the table. Now, I will say the good news from a technical standpoint is you're now back to about $225 per share, precisely the downtrending trend line that we have seen for years now. And Tesla tends to follow the technicals very close, which this trend line is right at about $225 per share. And I've talked about this level in many of videos. If we did get a downside reaction from this earnings, that would be really the level that I would be watching for to get support coming in. Now, who knows? It's possible we could dip under this for a period of time, but I do think you've priced in this earnings season, and I don't think you need to continue to fall from here. But obviously, if we do go through a larger correction, more downside in markets, I would expect we break this trend line. But if nothing changes, if earnings are so-so, political volatility does not start to impact our markets even more, I would expect Tesla starts to get a lot of support here in the mid 220s, 225 as low as 220. I think there's going to be a lot of demand starting to come in at these prices. So I would be a little bit careful now if you're watching this video trying to get in and out of your Tesla position, because there's a good chance we wake up tomorrow and Tesla's only down 4%, down 5%. Tesla's back in the 230s, maybe low 240s. That's a possibility. It's also a possibility Tesla continues to trend lower to 210, 220, but really how much downside it is here unless the economy gets worse, unless we get a negative inflation surprise this Friday, unless other big tech earnings are just bad. I mean, how low are we really going to go for Tesla? Nothing changed today. The Tesla thesis is the same now as it was 10 hours ago. And that's really for better or for worse. If you were bearish 10 hours ago, you should still be bearish. If you were bullish 10 hours ago, you should still be bullish. But I do think from the broader market's perspective, these AI earnings are just not what investors were expecting or pricing in. People actually wanted to see Google come out with some AI revenue, some solid guidance on products that are going to bring in AI revenue and not just save the company money. And this is something I've talked about for weeks now, if not months, that the near-term expectations for AI are just high. They're too high. And this is one reason why I believe a correction is coming. And I think you're starting to get more solidly into that corrective phase. And I do think that will become more evident over the next couple of days. But again, how much downside is really left in Tesla? You've went from 271 to 225 now, down to 220, 215, 210, 200. Even if you take $25 off of Tesla stock here, I think your odds start to dramatically get lower, that we do see a greater fall from here, if that makes sense. Like your odds that you would fall $25 at 271 were a lot higher then than the odds now that you fall $25, because you've already fallen, what, from 271 on a percent basis down to 225. You've already fallen 17.25%. You've already done a big move down. So, not a financial advisor, not a financial planner, but I would be a little bit careful trying to, be converted to this big Tesla bear when you've already seen a lot of the downside already. But hey, do what you guys do. I will show you what I am doing in my Tesla position. And that's a whole lot of nothing. In fact, I did nothing today. No puts, no hedges, no calls, no nothing. Market value of $19,422, down almost $2,300 today on this position. Still up about $2,700 in this position. So still got some gains, but lost about half of those today. That's okay, because if you're a longer term oriented investor, then today really just validates the longer term thesis more than anything. Average cost $194, 86 and a quarter shares currently, portfolio diversity of 34.77%. And I gotta say, I'm really not jumping at buying shares at these prices. But if you start to get closer to 200, you take another $25 off. That's where I think the story gets a lot more compelling, just because I think there are higher odds of a recession than markets currently want to price in. I think there's going to be more political volatility. I think the economy will get worse, recession or not. I think that can't be positive for stocks broadly. And I still do think we just need to see an old-fashioned correction, something that I think a lot of Wall Street forgot can even happen in markets. So for those reasons, I am keeping some dry powder on the sidelines, and if Tesla stock does create some attractive entry points, then I will put all of the cash in that brokerage account, which is about $15,000, back into Tesla. But I do think if you were someone that was kicking themselves as Tesla stock went to 271 because you did not have that much exposure into Tesla, maybe you sold out previously at 225, 226 or so, I think you're getting an over 17% discount from the highs. I think that's a good opportunity to start getting back into Tesla stock. But again, I'm not a financial planner. I'm not a financial advisor. I'm not a fortune teller. Who knows what's going to happen next in markets or with Tesla specifically. But what I do know is today, it's not nearly as bad as what Tesla stock would say it was, down about 8.3% at the time of recording this video. So hopefully you guys learned something out of this video, gained some greater perspective perhaps. Let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us, check out that link down below in the description of this video. The funniest part is, if you were bearish on Tesla and you did buy puts, for anyone that's, you know, short or have some puts out there, Tesla was pricing in an over 9% move. So if this loss holds into tomorrow, the put buyers still lost money. And that's why I didn't buy any puts on Tesla, because I did not foresee a 12, 15, 20% drop coming. And so far, so good. You're moving in line with expectations. So sorry if you bought some puts, but, you know, usually betting against Tesla or Elon, not a great idea. Besides maybe the last 12 months, maybe that was a better idea. But nonetheless, guys, you have a great rest of your day, and I will see you in the next one.